Oh my God. Have you seen what is on Bloomberg News? President Biden is unveiling a tax plan that would raise capital gains all the way up to 39.6% and up to 43% for the wealthiest individuals in the country. At this point in time, we've got popular YouTubers joking around that they're going to leave, people acting as if it's the end of the world, and somehow the market decided it was going to tank by 4% yesterday, and life in America might just as well be over as we know it. Hello, hello, hello. I'm Andrew, and welcome to the Dad Manual. And this is my attempt as a dad, and only a dad, to talk about all the FUD you're seeing out there in the news and on YouTube right now about this tax plan. If you haven't guessed yet, I don't really have the same opinions as most of those people. In fact, I'm going to say something extremely controversial. This is going to get me a lot of hate either down in the comments or at least by my friends and family. And it's probably something that most of you out there that'll be watching this actually disagree with. But I'm going to say it and say it out loud right now. You should not fear taxes. That's right, I said it. And before you all go down to the comments talking about,
Oh my God, Andy, I can't believe you said that out loud. Are you wanting us to be a socialist country and end like Venezuela? Don't you know that taxes destroy wealth and that if you don't give tax breaks, that you're going to destroy the economy and cost jobs?
listen up, hero. We just need to talk about all the FUD that's out there because all this propaganda and FUD, fear, uncertainty, and doubt that you're seeing out there by people in the market isn't the real story. It's not even the rest of the story, as Paul Harvey would say when I was a kid. So, in this episode, we're going to cover the top 5 reasons why you should not be concerned about the Biden tax plan. You got to get rid of all the fear, uncertainty, and doubt. I'm telling you, yes, it's FUD. When people are telling you should be fearful and this is unfair, they're spreading FUD. That's what's going on. You're right, I said it out loud. Reason number 1, chances are this tax plan isn't going to affect you. That's the truth. You might not like to hear it, but chances are you're not going to be withdrawing $1 million from any plan within the next few years. You're not going to be withdrawing $1 million at any given point in time to even reach those highest tax brackets. That's the reality. And if we're interested as to who actually owns the long-term capital gains that are actually going to be affected in the stock market, a quick search on Google and we'll find ourselves located over here at the Tax Policy Center at the Urban Institute and Brookings Institute. And we'll find out that, foreign investors own 40% of U.S. corporate equity. That's stocks. 40% of the U.S. stock market is owned by foreigners. They don't pay taxes in the U.S. tax structure. They pay their home country. If we look at who else owns it, well, retirement accounts own it. But here's the kicker. 30% is owned in retirement accounts. Retirement accounts are already taxed at the structure Biden is proposing. They're already taxed there. Why is this a problem? Long-term capital gains are only held in the 25% of taxable accounts that actually exist in the U.S. stock market. And that's not even all long-term capital gains, because what you're not being told is in that bracket of 25%, there's 2 different groups. There's those that are short-term capital gains and those that are long-term capital gains, which means the people who typically hold the long-term capital gains, more often than not, those people are the uber ultra wealthy. And I'm sorry, but they don't need the extra tax break. The idea that somehow they're going to benefit and it's going to benefit the market by having them pay lower taxes is just ludicrous. This isn't going to matter to them. Reason number 2 that you should not fear the Biden tax plan is because we just need to be real with ourselves. If this physically happens, all that would happen is your long-term capital gains would get taxed at the same rate as your earned income, which you actually expended your time to go ahead and make money with. That's it. Just makes it fair across the board. I don't understand why people have such a big problem. And earned income, it's not like when we're talking about this whole, maximum 40% range. It's not like every single dollar is taxed at 40%. It's a graduated income system. It's the way it's always been. I mean, if we go ahead and we change over now and we take a look at the way the taxes would work differently, we can change over and we can see here that if I was to say start out with $10,000 and in a year it becomes worth $1,010,000. If I have a length of ownership of more than a year, I live in Toledo, Ohio, and I'm married, you can see that I can expect to pay $230,000 in taxes. 230. Okay? If I go ahead and change that to less than a year, you can see that number changes to 369. All right? That means that my effective federal tax rate is 32% when I get all the way up to $1 million. That's not 39%. That's not 40%. It's only the money as you make more money that the percentage goes up. That's it. I'm sorry, but I don't feel bad for individuals who are ultra wealthy because they can't afford the butt warmer in their private jet. Like, I don't feel bad for them the same way I don't feel bad for a McDonald's worker who makes $9 an hour, who goes out and buys a Ford F-150 and is car poor. I don't feel bad for either one of them. Chances are both of them are living outside their means. If that big a tax issue means that much to you, you're living outside your means, and I don't feel sorry for you. The third reason that you should not fear the new Biden tax plan is because if it goes through, it does not tax dividend income any differently than it does today. And you know what? In the stock market, there's a lot of stocks that pay dividends. There's a lot of stocks that pay dividends. So why in the world is everybody wigging out, acting like the stock market's going to crash and nobody's going to have a place to put their money anymore? Are you kidding me? Maybe there will be a sector change. Maybe there will be a sector change. But the reality is, what are people going to do? They think they're going to set the money off on the side and they're going to put it inside of a bank instead and have it lose money to inflation? Or they're going to put it somewhere where, yeah, maybe they won't withdraw the long-term capital gains, but they can still collect their dividend income at the lower income rate or lower income tax rate. Like, come on, dude. Like, it's not going to change anything. Maybe, just maybe, Verizon and AT&T became, they look maybe a little bit better now than they did yesterday. Reason number 4, you should not fear the new Biden tax plan, is because you don't pay capital gains until you actually sell your taxes. That's the truth. Like, I hate to say it. I made 700% on Tesla last year. You think I'm going to go sell that Tesla stock now just because of a Biden tax plan? When I know that stock has a plenty of room to run for the next 10 flipping years? There's no freaking way I'm going to do that. There's no way. That's not what rich people do. If I had that much confidence in the company that I knew it was going to go somewhere, then I'm going to hold it. And chances are there's going to be 2 different presidents by the time we get there anyway, and the tax plan's going to change again. So the idea that we should all get our panties in a bunch based off of a tax proposal to pay for an infrastructure bill is just absolutely ludicrous. Second, this isn't how wealthy people act. When you actually achieve wealth, what do? You take your assets and you leverage them to go buy more assets. So yeah, if I needed the money right now, I would take my money, just the same as Meet Kevin talks about and with M1 Finances. I would go take my money and I would go ahead and take 2% a loan out, go out, purchase some real estate, fix it up. And after I did that, you know what I'd do? I'd refinance the money back out of the real estate. And all of a sudden my margins paid off and I've got my money still. Like, this is what rich people do. Rich people create passive income. That's the end goal, is passive income. Capital gains taxes are not what make you wealthy. Trying to skimp out on taxes through reducing capital gains liability does not make you a wealthy man or woman. It's just the truth. And the bigger portion is, if I really needed that money, chances are I got bigger problems in my life that I really needed that money, that I'm going to complain about the extra taxes I would pay based off of the tax policy going up. I mean, if I needed $1 million and I'm worried about the $200,000, it's probably because I've got some big medical bill that my life is going to be cut short to begin with. So, like, I got bigger things to worry about than a stupid tax plan. Like, that's just the reality of it. And I'm sorry, but I ain't got no patience for that. You go ahead and you come up with a way to solve problems. That's what dealing with money is about, is coming up with a way to solve problems. That's why we exchange things in human time. Reason number 5 that you should not fear Biden's tax plan is because there's this myth that permeates the internet that tries to argue that somehow if we raise taxes, it destroys jobs, or that lowering taxes promotes jobs. It does not. There's no evidence of this. It doesn't exist. And I hate to tell you, but trickle down economics has not, does not, and will not ever work in the history of all mankind. It's the way that it is. When you're arguing for lower taxes and you're arguing for this type of system, you're not arguing for free market capitalism. You're arguing for feudalism. You're arguing that people that control capital, whether it be land, or which is what it used to be in the feudal area when you had kings and queens and monarchs and lords and dukes, or whether or not we're talking about company capital, or whether or not we're talking about actual data capital. You're arguing for feudalism. You're not arguing for a free market system, which is what capitalism is. The two things are not necessarily hand in hand. And if you don't believe me, go read Mr. Smith's book, The Wealth of Nations. It's spelled out clearly in there. The idea that people try to conflate these two things is just ludicrous. Basically, what is going to happen, guys, is if this tax plan goes through, and I'm not saying that it will, because to be real with you, I don't think there's enough votes for it to get through. It's just the way that it is. You're going to see a tipping of the scales. It's kind of like a pendulum. It goes back and forth and back and forth. And what will happen is we'll have some higher taxes over here. And then the one thing that nobody who's arguing about with these taxes over here isn't talking about is we're looking at eliminating at the same point in time in public policy. On the other side, we're looking at eliminating the state and local income tax deductions, the limits that President Trump put on in the last 4 years. Nobody's talking about getting rid of those, which is one of the things that's actually being looked at right now. There's a lot of people on Capitol Hill who are trying to push that through right now. Chances are those type of things will be a wash. That's just the reality. And what we're going to find is that if you continue to move it back one way or the other way and it swings, eventually it'll come back to the other side. And people tend to act as if this is going to be the doom and gloom of the nation. It's just not. It's just not. Before we go on and we talk about our Finance Friday accounts, I want to leave you with a couple of final thoughts. Number 1, the word FUD stands for fear, uncertainty, and doubt. And right now, with this news article out there, there's a lot of fear that exists that the taxes are going to go up, and all of a sudden, as soon as taxes go up, that the stock market's going to take a hit. It is our job as investors to realize, like Warren Buffett says, when others are fearful, you should be greedy. So you know what I did yesterday when this tanked 4%? I went out and I bought some of my favorite stocks because I saw it as a buying opportunity. Number 2, the next thing I'll tell you is, you know what? There's a very good argument to be made that if you did change all the taxes across the board to being the same tax structure, whether they be passive income, dividends, whether they be long-term, short-term capital gains, or whether it be earned income, that if you did that across the board, there's a pretty good argument to be made that you could actually reduce taxes as a whole in the country. There's a pretty good argument to be made for that. I don't really have a plan for it. I don't really care. You know what? I'm not a politician. Because I realize that, number 3, life is a game. And as a game, remember, there's a start, there's a stop, there's people, and there's rules. So, since this is a game, if you navigate people and you navigate the rules better than those around you, you'll be successful. So it doesn't matter to me if they change the tax code and the taxes go up on long-term capital gains, because I'll just be paying attention to it and I'll make adjustments accordingly. I'll still be one of the winners. I really don't care. The idea that I should really be focused on this FUD that America's going to go downhill because of long-term capital gains rates changing, it's just crap. It's just not going to happen. And for those of you that are arguing and joking around that you want to leave the country because capital gains are going to go up, you know what? Get the heck out of here then. I don't want you here to begin with. You're using resources by being in the country that I don't want to pay for as a tax citizen or as a citizen. That doesn't mean that I think that you're less patriotic because you don't pay your taxes and I do pay my taxes. That just means I think you're being short-sighted and you're having an argument about something that in your life, because you've reached that level of wealth, that it actually matters, you're arguing about something that doesn't matter. That's the point. You're literally arguing about something that does not matter. And it just boggles my mind why we see all this fear, uncertainty, and doubt exist out there, and people feel the need to argue over something that's probably A, never going to affect them, and B, if it doesn't affect them, they're arguing for somebody else. So like, I don't need people to argue that I pay less in taxes. I already probably pay less in taxes than most of the people that I know. It's just the truth. It is what it is. We should have a growth mindset, and instead of focusing on trying to make $5,000 a month and pay zero in taxes, how about we focus on trying to make $30,000 a month and paying $50 in taxes? Because if that was the case, that means we'd be left over with $15,000, which would be 3 times as much as we would over here. Just seems to me people spend too much time bending over to pick up pennies instead of reaching for dollar bills. I don't know. It just gets on my nerves. All right, now, quick update about our Finance Friday. I'm going to go ahead and change it on over. You'll notice here that in our value stock account, you'll notice that Dropbox, we're still putting money in here. We're overall up by 3.76% for the entire year so far in the 12 weeks that we've put it in. So, I mean, this is treating us pretty well. I can't complain too much about it. Although I will say when this gets up to about the $28, $29 range, I'll probably be putting in a second type of stock for a value stock because my price target, if you remember, was $30. You can see here in our dividend stock that we're still up in Verizon overall. We bought another $25 worth, and we're up a total of 1.26% for the year so far. It's done pretty good. Moving on to our growth stock. You can see that we've had a great rebound overall with Tesla, and right now we are back above. We're in the green with a total of 2.04% being positive. We actually purchased this year and drove our cost basis up as opposed to driving it down because Tesla's had a pretty good week so far. And then if we move on to our S&P 500, good old S&P 500, even after the debacle yesterday where the stock market crashed, you can see overall we're up 5.4% for the year. We're doing the best that we have so far with this account. Although what is interesting, and I'm going to go ahead and change it here back over to this screen, is I want to show you something here in a moment, and you'll see that I had a period of time this week that actually Tesla, before I purchased it, I'm going to try to put it right here, that Tesla moved into being the top tied performing stock of all the 4 accounts, which the reason I show you that is because growth stocks, they tend to have huge swings. And we were down for the longest time in Tesla. And there was a lot of questions on whether or not that was a good investment because Tesla still is perceived as being overvalued. And here we are again, Tesla looking like it's back up there, right? It's back in the runnings for overall being the best of our 4 groups. So I think it's still early in the game. Today, especially, we're going to hear about earnings from Tesla. So I think that we're going to start to see some spikes over the course of time, even though we've had the FUD surrounding the Texas crash. But it is what it is, right? You're going to have some fear, uncertainty, and doubt that comes in the market. We just have to take advantages of all those opportunities and continue to buy the dip. Buy the dip. Well, that about wraps up today's episode. What I want to know, though, is how you feel about the Biden tax plan. Tell me about it down in the comments below. And while you're down there, if you haven't done so already, please hit that thumbs up, hit that subscribe button, and consider sharing this with one of your friends. It really does help out the channel. And thanks for joining me today. Here we produce videos twice every single week. And until next time, I'm Andrew Sherman. This is the Dad Manual. And always remember, failure isn't bad. Failure to try and learn is. Have a good one.